My name is Michael Guyette, publisher of the Lead Lag Report. Joining me for the hour is Nicola, who I've been tracking the last couple of months here. Very thoughtful trader. I think this will be a great conversation. Nicola, for those who are not familiar with your background, introduce yourself. Who are you? How'd you get involved? Interested in trading? And what are you doing now?
Hey, I am ex-military. I'm an ex-air traffic controller in a previous life. And I've always been interested in trading since I was sort of a teenager. I would trade the stock market and traded the dot-com boom bust. And eventually just decided I wanted to do this full time, made enough money to do it, traded on my own for quite a few years, mostly oil, traded for a couple of hedge funds, and then got into crypto. So in about 2017, I had a sort of Facebook group just sharing crypto trading ideas and mostly trend trading, how to trend trade. And I've been doing that ever since. It's weird, isn't it? So I think one of the things I find about the market is you can feel at the end of the day, whether you beat the market, whether you have a good day, whether you whatever, it never really made me feel like I was making the world a better place or I'd left it, done a good thing that day. But since I've been trading in a group and with other people and feel like I help people and share, it all fits into place for me.
Yeah, what's funny about that is it's true, right? It doesn't exactly give you a sense of advancing society when you're trading
No.
short term, right? You can make the argument that if you're a real long term investor, that's a different story because you're trying to reward where capital is best treated from a fundamental perspective. But I never kind of thought of it from that standpoint. And you mentioned that you have kind of a group of people that you kind of collaborate with or help.
Yeah.
Do you find that is additive to your trading, or is more just sort of a feel good kind of thing if those that are around you are benefiting from your analysis?
Honestly, it's really a feel good kind of thing. I really never felt like I found that after a while, particularly after 2008, I was quite burnt out, and it didn't really feed my soul. It didn't. Because it can be so consuming and absorbing, but at the end of the day, it's you against the market. You really haven't changed the world or made the world a better place. So I found, I learned a lot of good strategies, some that work, some that don't. Moving averages work. I saw a lot of people coming into crypto that were just hodlers and were, when everything turned and went south, were just losing everything. And I think a good trend trading strategy can really help people. So that was really my goal. And I tried to keep it really affordable. So, like a monthly affordable fee. So that was basically, it just makes me feel better about doing a job that doesn't really make the world better.
Yeah, no, that's a fair point. So it's interesting about moving averages. So I've made this point before that I don't view moving averages as a way of telling you the trend. I view it as a way of telling you volatility dynamics changing. So independent, right? So independent of the asset class that you're looking at, usually when you're above a moving average, volatility for that asset class is lower than when you're below moving average when volatility rises. And I always make that point that matters because volatility is often what gets people into trouble, right? The real trapdoors happen when you're already kind of moving around violently. Talk about applying moving averages to the crypto space because it seems like whether it's above or below moving average, no matter what, it's pretty damn volatile.
But before all this institutional money and honestly, before FTX and before all that came in, which was really sort of 2018, 2019, it traded so nicely. It was such an old-fashioned market, and technical analysis strategies worked really well. But, with all these exchanges, which are really obscure, suddenly all of this institutional money was trading against you, knew all your strategies, and they stopped working or stopped working so well. I actually am pretty happy to see, although I lost money in FTX, I'm pretty happy to see them shaken out. And I think I'd be happy when all of those leverage players go, just because, they were all trading against ordinary people that I teach in my group. So I don't think it's necessarily a bad thing. I think the leverage that we've seen in crypto has not been good for crypto. Bitcoin itself has held up really well, but that's my view.
Is there anything from a from a technical analysis point of view that maybe suggested that something was off, right, in some of these exchanges and in some of the ways that these things were trading. I'm trying to get to the point of, can technicals maybe warn you in advance of something that could be fraudulent?
No, unfortunately not. And this guy, he was properly, um, he put on a good front. He pretended to be altruistic and a vegan and all those really amazing things, and lobbied all these congressmen and lobbied for regulation and looked like he was standing up for the little guy, and he wasn't at all. What was interesting, my ex-boss, my ex-hedge fund boss told me his firm was the only one that they could get through compliance. So they had accounts at FTX, whereas they couldn't do that at Binance. So they either were in the futures, which is just Bitcoin, but if they wanted to do anything other than Bitcoin, they all had accounts at FTX. And most of them were shorting all of the time. Like if you notice the high that we made in 2018 was immediately we had the futures, and I think a lot of them were structurally short as well, using like the perp via these exchanges. So the exchanges collapsing and the leverage going will take a lot of the downward pressure away from the crypto space, to sell pressure anyway.
Yeah, and I've made that point a few times, right? I keep going back to
Yeah.
leverage is the necessary precursor to a crash. The issue and the dilemma that I see with sort of the long term view on crypto, and we'll separate out Bitcoin from this for a second, is you don't have global regulation to prevent the over leveraging, the overconfidence, and then again the kind of rinse and repeat cycle of these constant tail events, right? Because I've made that point before, right? You may not be able to get
Yeah.
100x Dogecoin in the US, but you might be able to get it in Cyprus or some other part of the world. Um,
Exactly.
right? That seems to me kind of like a dangerous underlying dynamic for anybody that wants to follow technical trading rules, because again, you can be following a moving average, but if the leverage results in a tail event, the moving average doesn't mean anything because you slice right through it very quickly.
I don't think anybody should be using moving averages as a predictor of what's going to happen. I just think that it's a really good risk management tool. All technical analysis for me really is a good risk management tool, and a good way to, most successful traders have a pretty good plan of when they're going to get in and get out that they stick to. And so I think that for me is the main benefit of technical analysis. And, for everything else, you have to rely on some fundamentals. So, yeah, I don't necessarily disagree with you. I just don't think that people should put faith that, for me at the moment, the biggest indicator that we might be bottoming is not anything to do with technical analysis, but the sentiment is so bad for most markets at the moment.
Yeah, and
If,
we'll
if we
definitely
don't
expand on
bottom,
that.
we'll at least bounce.
Yeah, no, and I definitely want to expand on the sentiment because I think sentiment follows price. So one thing is to see it, I think, on
Yeah.
Twitter, right? Another thing is to see it based on just pure quant data.
For me, like an RSI, like a divergence in an RSI, or a really overdone RSI wouldn't make me sell, but it would make me, if I was long, be wary of a reversal. Um, that's all. So I think it's just, you just use it as a risk management tool, not a hard fast entry exit tool. You will lose a lot of money if you did that. So as I said, these are really risk management tools. Ideally, you don't want to get in any market when the RSI is really overblown. And if you're already in it and long, you want to be looking at maybe a shorter term reversal signal. That's all I use it for.
Let's talk about just kind of the backdrop for a moment. I believe you're in London, correct?
Yeah, yeah. I'm outside of London now, but that's post COVID.
How are things on the ground? I mean, I'm in the states. I think in the states, and a lot of FinTwit probably is in the states. There's still a lot of concern around inflation in Europe and the eurozone, and what's happened
Yeah.
with gilt still are freaking people out with a delay. Just lay it out for somebody who's actually there. What's your take on things?
I think things are much worse here than they are in the United States. So my first cousin, is living in Las Vegas, and he thinks it's massively expensive there. But I actually think that it's much worse here in Europe, and certainly in the UK. Inflation is much higher, um, and there are people really, really struggling, and sentiment is really poor. So, um, this I think that we're going to have a much harder landing from this inflation period of inflation than you are in America. So definitely. And
And do you get a sense?
I talk to
Go,
people
go.
in America every day, and I just don't see it as bad there as it is here.
Do you get a sense that the policymakers are starting to change their tone on the way they are approaching this, or are they, like in the states, adding more fuel to the fire?
Adding more fuel to the fire. I really feel that. Do you know, the two countries I would say that have the biggest problems also have the worst political systems. This first past the post two party system, um, where not everybody's votes count in the UK and the US, has led to really, really partisan politics that don't work. Nobody makes long-term strategic decisions. Every 4 years or 5 years, when everything changes, everybody throws all the rules in the air and starts again. And we change direction, and that I don't think is good for long-term strategic planning or strategic investment in any country. So I think the system's broken.
And that's got to be hard to trade through, right? I mean, if you're
Very trade through. Very
right.
hard. Because
Yeah, good.
no, go ahead. Sorry.
No, no, I was just going to ask because I don't know if there's most traders and investors have a degree of home bias, right? They want to focus on their own local stocks or investment plays. I don't know what you're trading specifically. We'll talk about that too, but yeah, talk about that part of it because I've got to assume, like I said, that's got to result in some independent of technicals, just very challenging whipsaw periods.
Very challenging. There are some differences, like in the UK, we have not built anything like enough housing. So, will we see the same housing market crash that you will? No, nothing like it. We just won't, because we don't have enough houses. And there are so many people waiting to buy when prices come down, which they don't seem to have in America. So, there are parts of the market that are different, but then there are an awful lot of people that can't afford housing. So I don't know if that's a good thing or not. Um, but in terms of trade, so in terms of investment, even in property, or REITs, or it is different here. It is definitely different.
Do you find that, given that is in the back of your mind and seeing it and feeling it on the ground, that makes you maybe more short term, that makes you a little bit more trigger happy to sell because you're just worried about kind of a longer term hold?
Yeah, you have to be, certainly with stocks and most markets. I think you have to be. Um, you can't really be, like, at the moment we have inflation and everything is booming, and I really wonder how much is that because of post COVID, like a whiplash effect post COVID, because structurally, you know baby boomers in this country and in yours are retiring. They are we are going to our population is going to go down, and that will be, and we have more and more technology and more robots, and that will be deflationary. So long term I'm not super bullish, but short term, um so I think you do need to be shorter term, yeah, definitely, as a trader. And I tell people, my parents or friends, you know who aren't traders but just want to invest, that you do need to have a plan, and get out of the way, because you need to have a shorter term view.
All right. So now you mentioned trading through the crypto side of things and trade on the oil and metals side of things. Are those your primary? Is that your primary opportunity set? You're just kind of focusing on those main areas.
I do focus on those main areas, although because I have a group, I look at a lot of charts every day, um, just trend following and stuff. So, but those are the main areas I focus on. Yeah.
So of those three, I think I know what the answer is. But of those three, which looks most attractive from a short to intermediate term, um, because I think it's amazing. So I've been part of one of the number one rules when it comes to content generation and being a content publisher is reuse old content as much as you can. So I've been reposting some of the prior Lead Lag Live conversations as edited, podcasts and videos pretty much every single day. And it's not a criticism by any means on anybody I've ever had on these discussions, but it's amazing to me how the forecasts that everyone was so convinced of when it came to oil, for an example, ended up
Yeah.
not playing true, right? And again, it's not a criticism on the analysis, right? It just goes to this point that this business of trying to see what comes next is really really hard. Um, what's your sense probability wise of those three, the crypto, oil, and metal space? What makes the most sense to kind of focus most of the long attention on now?
I really do think metals, um, gold and silver, prefer silver to gold, better shot, and platinum, palladium, um, maybe not so much copper. I think my favorite place to put money would be metals. I think that there's a good chance that we could find a bottom in oil, maybe around 60, 65. I don't think that we finished going down yet. Um, and then, but I think that a lot to do with that is when China gets over COVID again and starts firing up, and when they're done with the SPR, that yeah, oil will bottom, and not until then probably. So my favorite sector would definitely be metals at the moment. And to be honest, I think we're very close to a bottom in Bitcoin and maybe ETH. I think most of the altcoins, shit coins, unless they actually have a function, they're all dead. So
Yeah, I guess I kind of struggle still with the shitcoin altcoins. It's just a lot of these things still have market caps over
I know
$1 billion. Now I
it's
know, yeah,
nuts.
I know market caps don't really tell, right? Because it's based on the marginal trade. But I still look at that. I say to myself, there's still probably a lot more that has to get washed out. I would think.
Definitely. Yeah, definitely. But Bitcoin, I've been really impressed by how it has held up. And definitely, I think people need to separate crypto and these exchanges and what happened from Bitcoin and the technology. So I'm not so bearish Bitcoin yet. Although I'm not sure that we aren't going to maybe. I'm not sure that there's not one more shoe to drop, and we might not. One thing about Bitcoin, when it tends to bottom, it's a bit like oil. It very rarely makes like a V bottom, like hit the bottom and go up. It tends to retest and make a false move and before it bottoms it. So there are an awful lot of double tops, double irregular double tops and double bottoms. And so a pattern like that held would make me more interested to pile heavier into Bitcoin. But I do think buying the dips judiciously without leverage is not a bad buy. Well, he's admitted, doesn't he, that if you traded on his exchange, you didn't actually buy any Bitcoin, you just bought a number on the screen. So, God, that's quite something. That's a big number. I didn't realize that. Just, I don't know. I find like there are a lot of ways to manage your risk. You don't necessarily have to have a stop loss. You can hedge or whatever, but not managing it. It's clear that they weren't managing their risk at all. So that's something completely different.
Can we talk about stop losses for a moment? Because I think I'll be very upfront. I personally don't believe in them. I've never really kind of seen any back tests that would suggest that stop losses cause you to significantly outperform. Now, there's other benefits you can argue around forcing you to maybe reevaluate a position or viewpoint. But I'm curious, since you kind of alluded to that, Nicola, sort of your view on stop losses when it comes to trading, because as we know, volatility by instrument can result in some of these things getting triggered for no real reason except noise and randomness.
No, definitely. I think that you need to have a hard stop loss somewhere, because if there's a crash or a nuclear bomb, or you don't want to get wiped out. But having sort of stop losses close to the market, that I like to look at daily and weekly closes and how they behave around them. And so I think if you're a swing trader rather than short-term trade, well, I was an oil trader, I was quite a short-term trader. trader, but with most other markets, I'm much longer term, and I will look at the end of the day and how it closed, um, and rather than have a hard stop loss close to the market intraday for those markets. So I do agree with you, and you do have to take that volatility into account, and particularly in crypto.
Yeah, and I think I mean, my father used to always be worried about stop losses because in his mind it's like, well, you're revealing your hand to the market maker, right? And it's like, they have a funny way of
Definitely.
targeting that.
And now that we have these exchanges where we know they have bots that trade against you, they'll just take your stop. So the best the way I've tackled it is to not have shorter term stops, but to just have wide hard term, disaster stops, really. I think, okay, in a market like silver, if you're trading silver futures, then it's a closed market. There is no over the counter that nobody can see. But how much does the silver paper market, drive the futures price? I think it does quite a lot. So, could it be manipulated that way? Same with GLD and gold. Yeah, I think it could be a little bit, but it's a regulated market, so that makes a difference. I don't think it's as easy to manipulate. I think crypto was easy pickings, unfortunately, because it was unregulated.
Yeah, although
But
it's the unregulated stuff that gets that has the biggest swings, right? Which kind of makes
I
some
know,
sense, and a traders get attracted to that, right? Because they want that
right.
quick hit.
I just tell people, just, you got to trade it, not marry it and keep it forever. And you're not going to hodl it forever because it's going to pay for your grandchildren's education. It's just a trade. So you're buying some tulips and they're going to die. Yeah, exactly.
But I guess this is the other thing which I think is kind of interesting about being a technician, right? I mean, a true classic technician, in theory, doesn't really care if it's regulated or unregulated. They don't care, what it is that they're trading, including tulips, right? Because
Right.
price is price, right?
If the
So,
chart says it's going up, it's going up. Let's buy some, but let's not get giddy. Yeah.
right, exactly right. Which is just kind of interesting dynamic as it relates to this. So okay. So it sounds like you. So again,
The problem with crypto is there's so much scammy marketing around, and so many people think that with so many of these schemes, so many people thought that they were, in a coin that was going to make them their fortune, and they weren't going to buy anything else because they were in the one true one that was going to, and it's just rubbish. It's ridiculous. So I'll be glad to see the back of them.
how are some of the people that are in your trading community responding to it on the way up and the way down? I mean, the thing I think also when you're talking to a bunch of other people and traders is there ultimately ends up being a degree of groupthink also, right? When you're in kind of group dynamics, was there any kind of I guess variation or variability around people's thoughts or opinions on what comes next, or was everyone kind of on the same
Yeah, no,
side
there
of
are
the trade?
a lot of variability and a lot of people with different time frames and viewpoint. Luckily, and a lot of like a lot of people. One of the good things about it is that there was always someone sensible to talk someone out of it when they got a bit crazy, with an idea. So it works really well in that respect. And I try to tell everybody not to have all your money in any one exchange ever, just because I've been through regulated exchange failures. I won't forget PFG Best, so I don't want to see. So hopefully, nobody lost everything. And although a lot of people were hurt, I was definitely one. So
Right. It's like diversify your custodian. I think is.
right,
And honestly, I remember in early 2009, that was like a big thing because everyone was still worried about some other shoe to drop post Lehman Brothers, and you wanted to make sure in these states you were protected by SIPC, and SIPC has a limit by custodian by broker, right? So you ended up having a lot of liquid, well-to-do investors basically just splitting up all of their money across the Schwabs of the world, the Ameritrades of the world.
Yeah.
just because they were afraid of that.
And no different to when we thought banks were going to fail, but if your bank failed, there was a maximum deposit insurance that you would get back. So you never kept more than that in that bank, and then you opened another one account, didn't you? So that you could do that. Same with banks. I agree. But you just need to, as a trader, if you've got capital, you can always come back. If all of your capital gets wiped out in one go, it's very hard to come back.
Yeah, and actually, I want to expand on that because a drawdown is only permanent if you give up, right? So, which I think is
Right.
I want to expand on that. But just for the remaining 28 minutes here, everybody, please make sure you follow Nicola here on Twitter. I know also you have a YouTube channel. Definitely want you to keep on putting videos that you had done. I think in months prior.
I need to start again. I've had quite a difficult year health wise, so better now, and I'm ready to start again. Okay, I think currency is a huge thing. We certainly look at the dollar every day, twice a day. And because we look at the dollar so much, we look at the euro, which is such a big driver of the dollar. And yeah, it makes a really big deal, and it makes a really big deal for example, the FTSE will very often go down when the pound has a big day and vice versa. And the same happens in the DAX and the euro. The currency, your base currency makes a big difference. So no, I definitely do look at the dollar. I think oil sometimes has its own pressures, but certainly for metals, it's important. Like you would be, I think you would be like trading with one arm behind your back if you didn't look at the currency effect. And it definitely, when, cryptocurrency certainly has so few fundamentals. The dollar is definitely one of them. So you need to look at it. With regard to the London Metals Exchange, I have honestly been out of that for a little while, so I haven't been paying too close attention. But I do believe that there are some, whenever you get any player that's too big or too influential, absolute power corrupts, and I think that's what we've seen happening. And yeah, but other than that, I really don't feel qualified to give a view on it, I'm afraid, in nickel. But I do think it's very dodgy. I suppose I certainly tried as an FX trader for quite a while, and all of those, you know, the interest rate differentials and the way that markets moving and makes such a huge effect on currency. So, for example, now everyone's waiting for this Fed pivot or Fed pause, and so all of the data that the Fed bases its decisions on suddenly becomes really important again, whereas you could ignore it before. So I definitely, I think you're crazy if you're not looking at it. I also think that the strong dollar at some point is going to become a big problem for other countries, and we may need a new accord, But so no, I definitely pay attention to fundamentals and all of the data that the Fed look at, because that's what they base their decision on. So, God, that's a hard question because I seem to be having a bit of. I do read quite a lot. I like Mark to Market for his currency views every day. I find if I read him first thing, it really kind of gets my head in the right place about what's going on, bigger picture around the world. He's really good on overseas stuff. But in terms of market direction, I read so much. I'm trying to think of one person. I try to avoid groupthink. I used to be that I shut everyone out while I was analyzing a chart, and I wouldn't read anything because I wanted to see what the chart said. Mm-hmm. And then I would read other people's opinions afterwards because I didn't want to be influenced by what they were thinking. And as I've grown older, I've learned to shut that out so I can read them and still be objective.
That means you've muted everybody on Twitter.
I know. I know, and it'll be people with really big followings, and so people will listen to them, and yeah, it's Yeah, frustrating.
Don't get
Um,
me started on this dynamic. This is to me. I always go back to that point. It's like people think you can learn from a tweet. You cannot learn from a tweet. You learn by
no,
doing what everybody else does. You put the time, you put the hours, you read books, and
but
then
you
you
can have
take.
your interest tweaked by somebody's tweet.
No,
It
that's
can make
fair,
you
right? It can
think.
be a catalyst. That's fair, right?
Yeah, yeah. No, I definitely agree. But I find Twitter so useful for sentiment. Oh my god, I honestly, I think it's fantastic for sentiment. And people's sentiment at the moment is really poor. It just makes me think a bounce is inevitable. So
So let's play with that because this relates a little bit to sort of the thing I've been hammering for the last week and a half. Because I would take a different view on the sentiment. I think the sentiment is poor, but poor for next year, not this year, because the year is not over. Um,
correct.
right.
Yes,
So
I
so
agree.
this and this
Definitely.
is and it's like markets are funny. They will always or oftentimes do things that nobody ever even conceives as possible. All right. So the I use the word imminent for a reason, but everything in my work from a quantitative perspective suggests that this is kind of a high probability risk setup. And I said back last Friday that if anything happens, it's probably the next couple of weeks. So this week was a pretty poor one for small caps in particular. All right,
Yeah,
treasuries relative on the and we'll talk about bonds here. Long duration treasuries are spiking relative to intermediate in ways that you see in other tail events for equities, and usually historically when you have that kind of acceleration on the risk off side, that tends to actually mark a bottom in stocks, but a bottom in stocks at the low of the drawdown, which we're not at now. So I'll share that in a moment in the nest. Um, I'm curious. I'm not trying to look for confirmation bias, but I do think it's interesting to kind of debate this. Do you think that sentiment wise, people are just assuming that we're going to be okay at the end of year, and it's really next year when people should be worried? Because if that's the case, maybe the time to worry about is like right now.
I think that quarter ends and month ends and quarter ends, and particularly December, end of December can be really funny trading. And it's so much more to do with rebalancing books and window dressing and, exiting stuff and de risking rather than what people really think about next year. So I think we need to be careful. I certainly did some research and it looked to me like whenever the Fed has pivoted before, that treasuries have outperformed. So I'm looking at them certainly short term. But yeah, as we get closer to the year end and the holiday, I'm going to pay less attention to what the market moves are doing in terms of long term signals. For that reason. But I definitely agree with you. Definitely.
Yeah, and I think this is also a nuance, and I think even going back to sort of the confirmation bias point, there's somebody that has been DMing me, basically kind of poking holes on the quant work, not having read the research paper that's behind the lumber to gold finding, and is just doing all kinds of other analysis and is
Yeah.
challenging maybe just because he's got a counter viewpoint. I often find that people challenge you when it's not on when it's counted to their own confirmation biases, right? Is when they
Right.
want to
People don't
show.
like it when you have a different opinion to them. And instead of, trying to understand your viewpoint, they'll try and make you see that their way. um,
Right, and you can't.
yeah,
I've learned that as I got old. As I get older, it's like you're not going to change anybody's minds,
I
right?
know
So it's
that's
like,
why. But for new traders or people who haven't been around that long, it's really hard when you're up against that, and so it takes time to be able to rely on your own viewpoint and not be swayed by other people. So
do you think that requires a certain kind of personality that you've got to almost be very hard headed, right? To just like because listen, a lot of people say, "Oh, you're constantly countering haters," which is fine, whatever. I think it's kind of amusing, and I use this as a teachable moment. But I do think you need to have a certain kind of personality to fight back against a crowd that is being emotional against your hopefully unemotional analysis.
I actually think that one of the most important qualities of a good trader is resilience. You need to be okay. You need to perform okay when it's not that comfortable, or nobody agrees with you, or yeah, you're in that position. And if you can be in that position and still do your thing and trade your plan and think logically and behave and trade logically, then you're winning. So yeah, definitely, I think that that's resilience is a really important quality to have to succeed.
Yeah, and of course that backtesting element is critical. I always go back to,
Yeah,
right. It's like a buy and hold is a back test, right? So everything is a back test when it comes to markets. Buy and hold's a back test with one trade. So if you're gonna say anything and counter a crowd's viewpoint, at least have something to back it up based on history. Now, of course, that's not a guarantee that you're gonna be right, but you have something to hang your hat on, right? And I think that's an important thing for traders. So I know you talk about backtesting in other conversations you've
definitely.
done, Nicola. Talk about sort of how many
So,
backtests
if you back
have you
test,
done in that whole
so if,
process?
for example, if you back test the for 2023, since 1942, every year following the midterm elections in the USA has been positive for stocks. So if we have a negative year next year again, it will counter, a lot of years of history. And that's a long time. That's a lot of back testing. On average, I think it's like, I can't remember the exact amount, it's like 20 or 23% up, and treasuries outperform. So let's see if this is the year. Now, I'm not saying that that guarantees us an up year next year, but it puts us in a good position.
Well, and it could be both. And it's like it's like
Yeah.
I always go back to path matters more than prediction. I mean, you can have a very sizable decline and then ultimately maybe even close positive. I listen, for all we know, if a crash doesn't happen and you end up having this strong seasonality, which again I think the odds are against now, but for all we know, the Dow could close positive for the year, which would blow
Right.
everybody's.
Well, you just have a plan for if it doesn't. It
Right,
doesn't have to
exactly.
be a stop loss, but a hedge or a plan or a, reevaluation strategy.
So let's talk about that again from a trading perspective. So you want to play off of multiple different scenarios, right? Nobody can predict the future. You want to have as much exposure to as many possible future paths as possible, right? I mean, that's kind of the
Yeah.
ultimate idea of diversification, even diversification of trading. How do you do that when with your own trades, Nicola? And talk through sort of that dynamic of what happens when you have conflicting signals, right? So I always would go back to this point. It's like, all right, so even if you use a moving average, the moving average can be bullish and bearish at the same time, depending upon the look back period. 200-day moving average, 50-day,
Yeah.
10-day, right?
So for me, if to enter a trade, I kind of need three things to line up. And if they line up, even if I'm getting conflicting signals, I tend to take it, because you never know if this is going to be the one or not. And if you back test it and that's what your strategy says does, and if you do it every time you get this percentage win rate, then you need to do it every time. But you also need to recognize when it fails, and what your have an exit plan. It's as important as your entry plan. So I don't just have moving averages are great, but they're really quite poor at timing entries and exits. So I use a couple of other indicators, and if they line up, I take the trade. And if they don't, I don't. Or I wait until they all do. There's always another trade. So that's how I tend to look at it.
Yeah, and there's always another moment to come back. So this
Right.
is part of the psychology of a trader, right? Which is that when you go through a drawdown, I see Mandy Rafsanjani's in the audience. I had her on a space talking about this also. Psychology wise, right? You've got to be able to be very tough and stubborn in a drawdown, and recognize that sometimes the best thing to do when you're in a drawdown is to double down, which is not a very comfortable feeling, but actually makes a lot of sense because oftentimes risk is actually lower after a drawdown than when before the drawdown happens,
Right.
which is funny, right? Because people don't think of it that way. They think risk is higher when you're in a drawdown, not when you're before the drawdown, right? Which is always
That's exactly right, and that's what I mean about resilience. Because if your plan says you have to take it, even if you've just had a bad run, then you do. And so sometimes we have to do things that when we're feeling uncomfortable or it doesn't feel right, um, but we need to have a plan and stick to it. So yeah, I
yeah,
completely
and that's not
agree.
to say the plan doesn't matter, right? But you got to have. I always go back to that point. It's like you got to if you don't have discipline, it doesn't matter what trading strategy you're adhering to.
Absolutely, completely agreed. Discipline is key. So yeah, no, definitely. That's what I try and do anyway, and that's what I try and teach people. If you have a plan, if you have a strategy and you back test it, a technical strategy and you back test it, if it says that you're going to have this win rate, and then you suddenly decide which ones you're picking, and then it won't work so much. So you won't get the same results. Definitely, everybody should do that every year and take a proper holiday and completely break away from it. you know if you can't put hedges in, or there are people, obviously, in crypto, who are big long-term hodlers, but I don't think in any other market you need to be. You could put a hard wide stop loss in and walk away, or a hedge, and walk away. And I think it's really important. Like, I think mental capital is as important as the capital in your bank. And if you don't protect that, then you will struggle. And so, yeah, that's what I try and teach people, that sleep well and walk away, because mental capital is just as important.
I think anybody that's a trader has a natural shorter lifespan, so it is important to try to. It's like I'm way past middle age, and I'm not, in my 50s, right? So it's just the nature of being in the business. Let's go to Alex for another
Same
question.
here. I think sleep is so important as well. And I really try. If you wake up in the middle of the night, it's really hard not to just have a quick peek at the market, isn't it? But I think that the kimchi premium was a fake thing. That might have worked way back when, but that trade was over very quickly. So I
And
really
sorry,
don't.
can you explain that for the audience, just for those that are not familiar with that term?
Okay, so the kimchi trade was that Sam Bankman-Fried discovered that it was that Bitcoin on Asian exchanges was permanently higher price than it was on other exchanges. So you could buy Bitcoin in the US. Once they'd opened accounts in Korea, they could buy Bitcoin in the US, send it to Korea, and sell it there and make a profit. And like any of those trades, as soon as everybody else realizes how to do it and how to arbitrage it, the trade's gone. And so that didn't honestly last very long. I think that's why he did all these other things to make money, because it stopped working and it didn't make money for him anymore. So way back when, 2017, it was really hard to open an account in those countries and trade Bitcoin in those countries. So uh, that trade didn't last. I don't think that's anything to do with the Japanese yen. So really, the yen is, the yen went down to back where we were in sort of 1998. If you look at it on a monthly chart, it's like a big range trade. I think that we've just hit a really important high in the dollar against the yen. And I don't know that we will break that. So that's my view of that one, really. It was a really nice trade while it was working, but I'm not sure that we'll see much more yen weakness. So it's easy to say that Dogecoin is a meme coin and doesn't really have any utility, but it is really cheap to move Dogecoin around, and as long as it has Elon backing it, then I think it's got potential to go up. So I would say, for me, I think we buy it until it's clear that Elon isn't interested in it anymore, and as long as he's backing it, I think that it looks good for more upside. But we need to remember, it's not Bitcoin. It doesn't have long term utility, unless it's a kind of cheaper way to pay for stuff than Bitcoin, but that's about it. So yeah, as long as he's behind it, why not buy it? Just don't think that you can stash it away and hold it forever for your grandchildren. I have to say, I think that they've got better, but maybe I'm wrong. And this stuff, I don't think Twitter's got worse. I think it's pretty bad news for these tech companies, or if you work at a tech company, that he could cut such a massive amount of the workforce and it still works. So
Yeah, although I mean, it depends on who you ask. I mean, like I said, my it's not just me. I mean, just more on a side note, it's Zero Hedge's account, Unusual Whales, but like a lot of the big Twitter accounts are getting bombed with these bot replies, right? It's like I'll do a
Are
tweet right
they?
now, people will see it. It's just all my reply. That's why I've limited it to only people that I follow occasionally. I'm trying to test every now and then, but look, this stuff takes time. Everyone came in worried about uh, Twitter and Musk, and it's like, you know what? Yeah, it's true. When you have the network effect, it's very hard for that to get undone, right? So it's not going to Twitter's not going to go down without a fight, no matter who's in charge of it. Right? I mean, that's just kind of the reality.
Yeah. Well, he pledged to get rid of the bots, and I hope he does. Like,
Me too.
I actually think Facebook is worse for that. So, pretty much everything I post on Facebook gets spammed even worse. I literally have had to turn off commenting for everything I've done for at least a year now because it just gets spammed to death. And it seems you report them on Facebook and nothing happens. So it's all very easy to say, oh, Twitter's terrible, but believe me, Facebook is just as bad. A lot
It
of
might
people,
be.
it's the same people that shorted Tesla all the way up and all the way up and were so stubborn. I don't know. I hope he succeeds. I really do.
Well, yeah, I mean, I hope so too, selfishly, because it's like most of my social media credibility is in the Twitter basket, right? It's like,
Yeah,
it's funny
me
because a lot of
too.
people will attack Twitter, and it's like, okay, but do you really want Twitter to go down? It's like, where else are you going to go? There's nothing else that's anywhere near as close from a
Well,
community
I
affinity
tried
perspective.
Mastodon, but I it was too clunky for me. So
Yeah, that definitely did not work when that was trending for a day. Maybe for the last few minutes here, Nicola, and again, everybody, please make sure you follow Nicola on Twitter. What's been the biggest surprise to you in your journey being a trader, in terms of maybe what you learned about markets, about human psychology, about yourself? If you kind of look back with hindsight, what's been most interesting that surprised you?
the thing that surprised me, I I think what an amazing immense rabbit hole it is, the markets, trading, everything. How you think that you could just, these people that say, oh, for an hour a day you can build your stock market, it's so consuming, like it takes over your life. And I think that people who come into it don't realize how that will happen, how all consuming it is. But you definitely need resilience and self discipline. And if you don't have any, the market will teach you it. Pretty sure.
Yeah, it's markets humble everybody, just not all at
Yeah.
once. Right? Is I think the point, and that's sort of the nature of this. Yeah, let me chime in. 100% is possible. So again, this is why I'm saying it's. I believe the conditions suggest something imminent. I use that term purposely because the other component, which is what you're alluding to, is that lumber's been weak for the bulk of the year. You can also argue it's immensely oversold. Same thing with utilities in terms of strength, immensely overbought relative to equities. So, because you're at a juncture now where they've been warning for so long, and I'm not just saying this hyperbolically. I put out a stat that showed that usually when lumber is outperforming for this long, it also tends to precede major declines. Right? There's a length of time component to the amount of time the signal has been risk off, right, and a tail event. But if you don't have something soon, then yeah, actually the risk is quite the opposite. That it resolves itself. The leading indicators all flip because they've been so leading for so long, saying risk off without the real capitulation. And then yeah, then the entire argument for the crash ends up failing, on its face. Now, as I've said many times before, it's mind numbing to me. I keep saying this. I'm not trying to have it both ways. It's not a call. I'm not saying there is guaranteed to going to be a crash. Just because it's raining doesn't mean you'll crash. Just because it's sunny doesn't mean you won't. This is about conditions. Usually, in advance of these major tail events, there are certain markers. Lumber to gold is weak. Utilities are strong. Long duration treasuries outperform intermediate. You're below moving average. You have all that happening here. All right, but that's not to say that every time those dynamics happen, you have a crash. It's that when you have a crash or a major decline, those dynamics tend to already be there, right? That's why I'm sounding the alarm, because in the event that it's pouring, you want to be aware of it to slow down just in case. It's the mile marker is the crash. That's the call. I'm not calling a mile marker. I'm simply saying right now, history would suggest, based on these signals, that there is some kind of really short term risk here. And I keep going back to the fact that small caps this week were down over 5%, the fourth worst week of the year for the Russell 2000 in December, in what is supposed to be strong seasonality. None of that lines up with the bull case for how we close the year. I could very well be wrong. I have no problem being wrong. I would still repeat the exact same analysis.
Hold on. Sorry, I agree with you. I think that for me, the dollar is on a pretty key support, or not necessarily that's going to launch us to new highs, but I think it's pretty hard for the dollar to fall further right now. And I think that it is more likely that we see another swing lower into for stocks into year end as well. So I technically um, I agree with you. I'm not sure that this year end that we're going to see a rally into year end, although I am longer term more bullish next year.
Yeah, like I said, I mean, the best way I think to surprise and screw everybody is for the capitulation everyone's been waiting for in stocks to happen, just as everybody thinks it happens next year, and they think the year is over. Again, you never know, right? And thinking about conditions, probabilities, and outcomes. So that's the thing about being a trader. You're going to be wrong a lot, but if you're right on those big fat pitches whenever they occur, they can make your year. I mean, that's factual, right? Just from a quantitative perspective.
Definitely.
Anyway, everybody, again, please make sure you follow Nicola. Any final words here, Nicola, for the audience before we wrap up?
I would just say be careful of year end moves. I agree with you. I'm not necessarily thinking that we could fly into year end. It's been a very difficult year, and I think that we could end difficultly. But those are the times to be looking for opportunities. So
very well said. Thank you, everybody, for joining. I'm doing another space as usual tomorrow, and thank you, Nicola, for spending the time here.
Thank you so much for having me. I really enjoyed it. Thank you.
Cheers, everybody. Thank you.